In today's video, I'll be discussing 3 of the best stocks that you can have right now on your watch list for June 2023. Obviously, to put all those different companies on my watch list, I've used many important criteria, starting as always with the business model of the company, so how are they able to generate their income and who are their different clients to see if they have a sustainable business model on the long term. And after, we'll take a look at some of the most important financial metrics about these companies to see in which financial health are they currently in. So without further ado, let's take a look at my pick number 1. The first company on my list is the American pharmaceutical company AbbVie with the ticker ABBV. This business, created in 2012, has seen some massive progression over the last decade, where it's now worth over $200 billion. At the moment, AbbVie is offering over 26 kinds of drugs, going from their famous Lupron, which aim to treat the prostate cancer, Androgel, a testosterone booster, and Creon, a pancreas therapy. But the company's undisputed heavyweight champion is Humira. This is an anti-inflammatory medication that just happens to be one of the world's best-selling drugs. Indeed, this drug is used to treat different kinds of Crohn's disease as well as arthritis. So as you can see, AbbVie is offering a wide variety of medications to their different customers, and it is why in 2022, AbbVie was considered as the 5th largest pharmaceutical company in terms of their revenue, with some income of over $58 billion. And just on its side, its Humira treatment has provided them over $21 billion of revenue in 2021. Plus, as being a great pharmaceutical company, AbbVie is investing a massive part of its budget into the research and development to develop new medicines that could help them to revolutionize the medical world. It is why, to extend the scope of their operations, they are trying obviously to make some great strategic partnerships, but also to acquire great pharmaceutical companies. For example, in 2020, they have acquired the famous Botox merchant Allergan for about $63 billion. However, since the beginning of 2023, this company that has over 30,000 employees has lost quite a little bit of value, which might represent a great opportunity for you to jump on the boat. In fact, they recently came out with their earnings report, which were not as good as predicted, notably where they've missed both the earnings per share prediction as well as the total revenue prediction. And unfortunately, this miss comes a lot from the decrease in the total sales of their Humira products over the last quarter that have fell of over 25%. But despite that, and their quite high price to earnings ratio at the moment of about 35, they've still been able to increase massively their total revenue over the last 4 years. And the picture is quite similar in terms of their total free cash flow progression over the same period. And with a beta of about 0.55, it means that this company will tend to be less volatile than the overall market, which will provide more stability to obviously the great dividend income investors that will invest in this company, since it is also offering close to 5% of dividends per year. But now for the second company on my list, I've went with a company that is quite more risky compared to AbbVie, but that is so much discounted that I could not resist to put it on this watch list. And it is why I've decided to include the company PayPal with the ticker PYPL. Indeed, since the beginning of the year, it has lost close to 20% of its value, and since 1 year, it has lost close to 30% of its value. But why is it happening to them, and how does the situation could change pretty soon? Well, first let's see what this company is all about so you can understand why it has lost so much value since the beginning of the year. PayPal is a financial company considered as an online payment system, which is also accepted in most of the countries all around the world. So as you can understand, it acts as an electronic alternative to the classical checks and money transfer, and this company is going to be making the biggest part of their income throughout the different transaction fees, because in fact when you're using PayPal, every time that you'll be making a transaction online, it can be to receive money or also to send money, well, you'll have to pay a certain part of the commission to PayPal, and this is going to be considered as some transaction fee. And obviously the total fees that you'll be paying will depend of many different criteria, such as the amount of money that you are transferring and the country in which you are living. But obviously, as an online payment system, you can understand that this company has obviously grown a lot over the last couple of decades. In fact, this company, created in 1998, has seen some massive progression in their total valuation over the last 25 years that has reached over $50 billion of value, and obviously this was mainly due to the boom of the internet over the last couple of years. And since the pandemic has brought people to stay at home and shop online, it means that PayPal has been one of the great beneficiaries of this event. But fortunately or unfortunately for the PayPal shareholders, with the pandemic restriction that were going away, it means that over the last year, there was a massive diminution of the number of people that were shopping online. And despite having some excellent earnings report that came off recently, this company's growth has been squeezed because of the slowdown of the people shopping online, but also because of the increase of the competition in that field. So on their side, if PayPal want to be successful in the future, they need to rely and to capitalize on the great momentum and on the great notoriety that they have built through time. So as an investor, it can be very interesting to invest in that company if you're willing to take the risk that comes with it, that is also represented by a beta of over 1.30, but with a quite fair price to earnings ratio of about 25 and some great growing revenue over the last 4 years. It definitely is a great stock that I currently have on my watch list. And finally, the last pick on my list is the John Deere company with the ticker DE. Over the last couple of decades, this company has solidified its name as a leading manufacturer of agricultural and heavy-duty machinery. From excavators to backhoes, passing by dozers and articulate dump trucks, you'll find a great variety of products coming from this business. Indeed, the main mission of this business will be to help farmers to support the total food supply chain in the country, which is a super essential area in our economy that will be massively needed over the next couple of years with the project growth in the total population. In fact, if there is one certainty in this world, it is that we need to feed ourselves. By investing in that business, you are investing in a company that has made over $50 billion of revenue over 2022 by selling different essential agriculture products. And with the summer season coming to our door, this $100 billion company is also selling great lawn tractors and utility vehicles. And more recently, with the earnings report, we've seen that they've been able to massively beat the earnings per share prediction as well as the total revenue prediction. Nevertheless, this company has lost quite a little bit of value since the beginning of the year, which might represent a great entry point for the investors looking to invest in a company that has a super small price to earnings ratio of about 12. And the great news considering this business is that despite being a quite old business, it has still been able to massively grow their total revenue over the last 4 years. Furthermore, Deere is a great company for anyone looking for great stability in their portfolio by also looking at some great dividend income of about 2% per year. So there you have it. Those are 3 of the best stocks that I currently have on my watch list for June 2023. Obviously, there are plenty of other great stocks that you can find on the market, but I think that those 3 stocks are very interesting for investors looking for great discounted companies that have a lot of potential of growth. But on your side, if you're looking to invest in the best ETFs for 2023, well, check out the video that's going to be right over here, and I will see you soon. Peace!